What's up, dirtbags, degenerates, and, well, permabears and permables who've been getting cooked by this market? It is a new month. We're starting in November, and this is Trades and Gains. I'm your host, Max Pitts, and this is the only finance show where we cover the markets like it's The Bachelor, except for the prize here is Jerome Powell. In today's episode, it is full of buffet chaos. Well, Palantir just became Uncle Sam's favorite AI pet. Amazon threw $38 billion at OpenAI like it's pocket change, and the Fed, well, they're still playing guess that inflation number. Buckle up, folks, because, well, it's 2025 and capitalism is on caffeine once again. Now, you know a company's unstoppable when a government shutdown can't slow it down. And yes, we are talking about Palantir, as they just dropped numbers that made Wall Street analysts look like interns who forgot how to use their Excel formulas. Revenue came in at $1.18 billion. We had EPS coming at 21 cents versus 17 cents expected, and our Q4 outlook is above $1.2 billion in guidance. Alex Karp practically walked onto the call like, sorry, can't hear you over the sound of our defense contracts printing cash like it's a bank ATM. Commercial revenue is also up 121% year over year. Government revenue is up 52%, and the Pentagon's basically on their subscription plan. Palantir's gone from creepy data startup to the CIA's favorite child, because in 2025, ethics are optional when the margins are classified. Cue the crowd of retail investors yelling, PLTR to the moon, folks, and hedge fund managers pretending they never called it overvalued spyware. Balls in their court. Now, however, Palantir did give up the majority of its gains that it saw in after hours, so we will see how that opens up when people get back into the groove of things. Now, let's go ahead and talk about everybody's favorite shopping addiction that no one is willing to acknowledge, and that is the one, the only, the truest, the realest, Amazon. And it just looked at the AI arms race and said, forget buying the dip, let's buy the entire cloud instead. They inked a $38 billion deal with OpenAI, basically renting them a GPU universe. OpenAI is running ChatGPT on AWS with NVIDIA H100s, which means 1. OpenAI pays NVIDIA for chips. 2. Those chips sit in Amazon data centers. 3. Microsoft owns part of OpenAI. And 4. Oracle wants in on this too. It's a corporate love triangle or a four-way circle jerk, no matter how you look at it, but everyone's married to NVIDIA at the end of the day, and they're the only one getting that happy ending, it seems. Amazon popped 4% on the news, two all-time highs, because Wall Street's favorite drug right now is AI CapEx. Who can spend the most money on the most stuff without really explaining what it does? And here's the funniest part. OpenAI is on pace for $1 trillion in total compute commitments by 2030, but still hasn't figured out how to turn a profit. Yeah, those things aren't really adding up. But anyways, profit is optional when your data centers glow like the Vegas Strip. Now, the AI spending binge. Let's play whose CapEx is it anyways? Amazon is at $125 billion, up from $118 billion. Google's currently sitting at $92 billion, up from $85 billion. Meta's at $71 billion, another raise because, well, why not? It's AI. We need to spend more. And Microsoft, $35 billion in a single quarter. Analysts call this the early innings of the AI boom. I call it pre-game before the hangover. Big tech's cloud backlogs are ballooning, $158 billion at Google Cloud, $200 billion at AWS. Everyone's making money for now. But depreciation is starting to bite. Those $40 billion in NVIDIA GPUs, well, they're aging faster than a milk carton in Phoenix that you forgot was under the seat of your car. Alphabet's CFO literally admitted margins are bleeding because of accelerated depreciation. Or depreciation in this case. Translation, AI is expensive, but the dopamine hits are always free. Investors don't care though, they're too busy chanting, it's not a bubble until it pops. Insert the meme of Patrick when SpongeBob was like, Patrick, I don't think this balloon could get much bigger. Now, Our final story is the Fed's existential crisis. Meanwhile, in Washington, the Federal Reserve is running on U.S. monetary policy vibes and Wi-Fi. Government's been shut down over a month, 34 days to be exact, so Powell doesn't even have the data he needs. He's basically scrolling Twitter to figure out inflation at this point. Fed officials Goolsbee, Lisa Cook, and Mary Daly all said they're undecided on the December rate cut. Translation, they have no idea what they're doing, and they're not afraid to admit it. Inflation is still above target at 3.6% core and 4% services. Unemployment's holding steady at 4.3%. So the Fed faces two doors. Behind door number one, well, we're not tight enough. And door number two, well, we're about to break something. Either way, Powell's blindfolded and spinning a rate cut wheel like he's on Wheel of Fortune. This is what happens when your central bank is guessing the economy like a Wordle puzzle. And quite frankly, we've been covering this on the channel for a while. So as you know, the Fed really hasn't been on the same page in the last couple months. They all have been divided. Moran's up there asking for literally double, sometimes 10 times what they are willing to cut, because at the end of the day, that is Trump's mouthpiece. Lisa Cook, her staying in the Fed was pivotal because then that would have allowed for another, well, Stephen Moran to enter the chat. But having this much distance between your Fed members, which is supposed to be a central bank who are all on the same page, typically isn't a good thing. With the last rate cut we were delivered, we had Moran upset because we didn't deliver a 50-point cut, and then we had the Kansas City Fed chair say that he believes they should have just held rates steady. So we will see what happens in December. It is not a sure thing, because if it's one thing I have seen, today we saw a lot of SPY puts come in for around 12.19. So that looks like it's hedging towards some more downside there. And I even saw strikes down at 647 for those puts. Now those could be hedges. Those also could be positioning because people are expecting the worst for our next FOMC meeting, which is due December 10th. So what did we learn today, D-Gens? Well, one, Palantir proved war still pays, especially when it's powered by AI. Amazon and OpenAI just built the world's most expensive friendship bracelet. Big Tech's AI binge isn't over, it's just getting started at this point, and the Fed has no data, no clue, but plenty of scissors to cut rates anyways. Welcome to 2025 in America, where hype is the currency, AI is the religion, and Jerome Powell is the high priest of vibes-based economics. Make sure you subscribe to Trades and Gains, drop a like, and remember, follow the flow, not the noise. And this is always powered by Investor Central Club, the FU Money Club, and Printing Tendies. Because, well, someone has to track this circus, and those are three of the best places to do it. Feel free to join the link in my bio. Anyways, hope you guys are having a great night. I will see you guys in the next one.